Good afternoon, everyone. Welcome to this recovery show here at the Birb Nest, and a very happy Tuesday, the 18th of November to everybody. How are we doing today? Do throw us a nice hello in the chat if you are kicking around, and we are going to cover some really important subject matter today. Subject matter really close to my heart, as these sessions have been as we're going through. Going to try and blend in some charting as well, so we can really kind of give this some context in a really punchy session that's going to look at basically, creating the comeback environment, right? So looking at it and saying to ourselves, okay, well, we've taken some hits, right? Every trader takes them, by the way. It's kind of something that you almost want to see as part of your transition into this game. But then how do we come back? How do we plan for consistent growth in a space that's very volatile? All right. So let's just switch to the charts here and take a look. So like I say, we're going to kind of mix this in and out. Some are going to be a little bit of charting, but also want to open the chat for any of your questions, as we've kind of had so far as well. Miguel, how are you doing, my friend? And ladies, gents, I refer to you all combined as guys. So just to let you know that we are fully, obviously, inclusive. Do just ping me any questions you've got as we run through the session, right? Do say hello in the chat, use the opportunity to network with fellow people that are here as well. It's amazing what you can learn from other traders. And in my early days, I learned a lot from people that I was fortunate to be in some really good and vibrant communities with. Jojo, how are you doing? So I actually really wanted to keep this session, try and keep this session a little bit shorter and punchier, right? So, we can ultimately go on as long as needed to make sure that we get through all of your questions and that. But I don't want this to be, and hopefully the other sessions haven't been this either, I don't want it to be this preachy kind of, oh, you should have done this, you should have done that. Ultimately, we want to be forward-looking creatures in this world, right? Because we can learn a lot from history, but we don't certainly want it to dictate, our day-to-day. So we're going to just take a quick look at the key areas that I think really allow us to, first of all, come back from losses, but also build any form of consistency. So it seems like I'm really going to break these down into a couple of really kind of simple ways, really. But I do think that most people, whether you're new to the market or you've been around in the market but don't maybe necessarily have a very kind of direct or strict investment plan, or maybe you do but it just kind of went awry for you this time. Coming back from losses is a really big part of this game, and it kind of goes hand in hand with people really grasping the concept that these markets, actually are about making financial reward rather than being right or being wrong. Okay. And some of the very best examples of that are traders. I can think of a few off the top of my head, Crypto Birb being one of them. Actually, as a mid to long term trend trader, often is right, maybe 37% of the time. So willing to lose 7 out of every 10 trades, pretty much, if you think about it like that. But ultimately is very profitable because they have, he has a very good understanding of his risk to reward and has the conviction and the character to kind of hold through those periods of turbulence. Someone like me, for example, finds that an absolute nightmare. So I like to be in and out of my positions in a day, henceforth day trading really suiting me. Now, I don't want to kind of go over this too much because I've mentioned it in a couple of the previous sessions, but really understanding the type of trader you are, what type of trading really speaks to you, is really, really, really key, because think about it like picking a sport. And think of each different discipline within trading as a different sport. Now, you might turn up and try, football practice, for example. Yeah. And you might not really like it, and you think, do you know what, football, or wherever you are in the world, soccer, right? And you just think, oh, okay. Well, at that moment, you don't just kind of think, well, sport's not for me. You might try, baseball or cricket or, golf or something like that. And ultimately something just kind of catches your attention and speaks to you. That happens in most, disciplines, or most things that we're passionate about in life. Like when I got into music when I was younger, I tried to play guitar because of all the great guitarists, and I just sucked at it, but I also didn't really feel natural with a guitar. I tried a little bit of bass, and then I picked up the drums, and I was like, oh my God, I just really, really feel at home. And it allowed me to do a few things. It allowed me to align my passion with a schedule of very hard work, because the hard work came easy because I just wanted to play all the time. So I was practicing every single day, hours and hours a day. Even if I couldn't set a drum kit up, I just had this rubber mat and the drumsticks, and I was practicing like signatures and paradiddles and all these bits and pieces. Anyway, if I just kind of sat there determined to play guitar, I do not think I would have shared anywhere near the success that I had in the music industry. And look, I'm not saying that I, played with Led Zeppelin or anything like that, right? But ultimately, I got to play some of the world's really, really great venues, and I'm really, really grateful for that. And I just wouldn't have achieved that, I don't think, if I hadn't kind of found the drums and I just kind of stuck with the instrument that ultimately was wrong for me. So I just want to kind of open it by saying this again. If you're really feeling like you can't build strategies and systems the way that you are trading, then take a look at your lifestyle, take a look at your character type, take a look at the things that you struggle most with trading. For example, we've had Gassior, hello mate. For example, we've had a really good update from quite a few members who have come forward and messaged and kind of said, actually, do you know what? One of the biggest things I've really struggled with here is I was entering good trades, I managed my risk quite well, but I just got quite greedy, or, I wasn't really sure how I should be taking profit. Or one of the most common ones was taking profit too early, because getting into a successful position and not having the conviction to hold these trades to the follow through, right, ultimately costing you a lot of your return on risk. And therefore, meaning that when the losses hurt you, they always hurt you for 1R. Yeah, as long as you're using risk management, which you all should be. But, your testing and, all of your data is going to say that if every time you back test, you're allowing yourself to hold for 3R, yet every time you do it live testing, you kind of get panicky and shut everything out at 0.8R, those figures just aren't going to be robust enough. All right. And now I'm not going to go into that more. I think this has been mentioned in quite a lot of sessions, but do take time to really understand who you are as a trader, where you belong in the world of trading. And by that, I mean, are you someone that has the time, the inclination, and the passion for intraday trading? Are you somebody that likes to look at things on the longer term, looking at things macro sense, looking at things more based on information and using, minimal technicals to then, enter and manage trades? Are you somebody that really kind of the immense work that someone like KZM does, for example, looking at all the on-chain analytics, the deep research? Is that something that speaks to you? You're like, I love getting into the research and the data and the numbers. Or you're somebody that likes swing trading, or you're somebody that likes finding those real hidden gems, right? Whatever that is, just be honest with yourself about that and really make sure that you're finding and you're securing what should be a very, very well refined schedule and writing a pathway to your success. All right. Now, that's all I'm going to say on that front. That's been covered in previous sessions, right? And what I really want to kind of focus in our time today is how you're going to build your comeback plan, right? And off the back of that, how you're then going to lead that through to allowing you some consistent growth. All right. And thank you for the update, Jojo. We're not really going to kind of get around to that kind of stuff today, but it would be awesome maybe to pop that in the chat. For those of you that are wondering what the comment is from Jojo, it's just that jobless claims came in at 232K. We haven't had data because of the US shutdown, right? So it just means that weakening in the job market means we've got a soft job market, and that means that there's a higher chance that the Federal Reserve continue with their cutting policy in December and possibly even into 2026. Jojo's always very, very good for this information, but to give you guys some context, we will be covering that in a lot more detail on tomorrow's live show. All right, we're going to take a kind of look at the market overview, but just kind of looking and kind of getting ourselves locked in with the idea of the comeback plan. I personally think that most people struggle because they fail to understand the environment that they're in. Okay. So if we look at the two environments of price, and obviously I'm basing this on the technicals here. If it's something you're looking at with fundamentals and that, then understanding these core kind of concepts is still really, really important. So for example, you know, you look at, and let's just get we can get a clean chart up here, right? Let's get our Binance chart up. Yeah, it's really, really nice and clear, actually, the plan that we've been coming up with on here, right? So from, but yeah, anyway, doesn't matter. Let me just hide this, but we can go back into this context at another point. So super, super simple, right? Let's just put this on something like a 4 hour, just so that we've got a little bit more information. Understanding your environment. Price is either trending, yeah, or expanding, or it's consolidating or ranging. What this means is if we see a consolidation, then price is typically in balance or considered fair value, all right? Now, it can take you a little while to kind of spot these areas. That's why we've kind of got this area here on the chart, but we'll just get rid of this for a moment. One of the things that can help a lot is whatever time frame you're trading on is kind of really squish the chart up here. So like an accordion, move it from side to side, compressing it inwards. And it helps us just kind of spot these areas. They can be larger areas like this or slightly more obvious areas like this. Now, a really good exercise I would suggest for people is to highlight areas where you can see a lot of noise and then other areas where you see very thin, inefficient moves. So by that, I mean, you don't have to overthink this. I would say that within here, there's like a lot of noise. So even if you threw a box over what you thought was basically that area, and I'll show you how we can use this to kind of redefine it, then I would say if I'm looking at where the most noise kind of exists in this area and I'm trying to get kind of the most touch points, I would probably look at something like that, right? Versus looking for, and let me do this in one color, do this in blue, right? Versus looking for areas where you can see clear and obvious thin expansions, all right? So again, for example, we could copy that across onto this part here. Here, all right, and I won't bore you all with this too much, right? But if you really do just try and focus on the kind of areas where they're very clear and obvious, and this one actually, straight up and retraces itself straight back down. Well, the key thing here, right, is that we can see very clearly the route that price is taking. And it's not always incredibly clear because you would have this, right? And then from there, you would kind of look and you'd go like, okay, we had a slightly thin move here, but then price retraced back down to this area. But, those consolidations teach us a lot for a long time, all right? And the key thing here is whether you're treating your higher time frame as a weekly chart, a daily chart, etc., understanding and then looking within these areas of consolidation really do teach us a lot, okay? And why is this important? Well, one of the first things in terms of, planning your comeback here, if you're somebody that's been knocked out in the markets, maybe you're not, but either way, I'm certainly always, expecting more of myself. I always want to trade these markets better. I don't ever feel like I'm at the, the peak of my powers in this. Like that is a constant evolution. Boil and break down. Oops, sorry, I think might have just disconnected there for a second. Hopefully you guys have got me right. If there's any issues with the sound or the visuals, please do let me know in the chat. All right, I'll just give it a couple of seconds because sometimes it can do this weird latency thing and then try and catch up with itself. So let's just get rid of these, right? I just want to kind of focus in on this area for a moment because what we're going to do is we're going to overlay it with the information that we can see on here. All right. And again, if we're looking at this on a smaller scale, just going to highlight these areas of consolidation through here. All right. Now, you might look at that and think like, God, I wouldn't have drawn that as consolidation, or I wouldn't have drawn that. Ultimately, what I want to do is give you a little bit of advice on how you can kind of do these quite accurately using actual candles. But I really do believe that if you just really kind of move the chart in like this, if you're looking for, even if it's a short squiggly area like that, then what you've got is a consolidation. You see price moving up quite aggressively like that. Then this is, our expansion. Okay, that's what we're trying to do. And you don't have to be perfect with these, but one of the ways that I'm going to show you now how you can kind of refine this is if price in this case, as we know from here, is trending down, then the way that I look at it is I want to see the bullish candles form this consolidation, or at least a point where the buyers try to find some relief here before price then ultimately continues with its trend. So if we use that principle here, the first kind of bit of information we get up here is the fact that we have this bearish breaker. All right. This is really, really key for me in terms of how I trade. If you don't know what a breaker is, there's definitely information that we've got available at TBN for you, but I'm also happy if you want to reach out. I'll run through it with you in the nest. But a bearish breaker is we look for these last down closed candles, or bearish candles, or candle. If they're consecutive, we allow for them all, or I do. Or if they're singular, obviously that says itself. The key importance for me is price has to have swept a high. So we can see this high here where my cursor's hanging above is swept by this one. We see a rejection. And then the down closed candle here, I take the low of the body. I need to see price close underneath it. And then as we draw back to this area, this is telling me that the buyers here are offside. As price breaks down away, price can come back. We also then, within this area, set what I'm explaining here. Right, which is our bearish, make sure that's the right color, which is our bearish order block. All right. In fact, let me do these in red so it really kind of hammers it home. We'll do the bullish ones when we give those examples in green. Now, I know this can seem like a technical session at the moment. You're just like, well, I thought this was about comeback, but believe me, they are linked. All right. So just give me a moment. So as we see here, what's happened? We got the breaker. So we've got the down move, price sweeps liquidity, see the failed auction. We see a deviation of the high of this range. Yeah, again, if I just get rid of that, this is the range. This is the deviation of the high. This is the breakdown of the range. Price closes underneath. Look, these were wicks previously. Then we see price retest into this. This is then when we get the breakdown, any retest of this area, or remember the white or the bullish candles here that represent the consolidation. Yeah. We then look for continuation lower. So let me just get that back. So breaker, bearish order block, or area of supply. All right. Price breaks back down, retest, breaks back down again. Then what do we get here? Well, okay. The theory is that we expect these candles. Let me just move this back here. White candle, bullish candle, small consolidation, expansion. Yeah. Retest of said consolidation. Price should do two things here, right? If we expect further downside, we should see an opportunity for sellers to enter the market, aggressive sellers. We also see price re-engage with passive orders, limit orders left in the book by sellers. And we also do something else. Anybody that tried to long this move here that's then held through this drawdown, when price presents itself back here at their entry price or close to it, it allows them to take on board the new market information, look at what's happened, with this move and say, okay, I'm going to cover here, or basically, get out of the position completely at minimal or zero loss. And then we see that continuation down to the next level. Okay. Then as we look in here, basically what you're going to see is just a mass series of red boxes at the moment. All right. But we look in here and we say, okay, what happens next? Right. And let me actually just hide these as we're going down, because then we can keep it clean. Yeah. So then what happens next? Within here, price moves in. This is the area we want to target for sellers. So why does this have anything to do with comeback, by the way? And why does this have for consistent growth? Because you're starting to learn, if you don't already know this. And if you do, reach out in the comments. Let me know, right? Let me know what it is that you're really struggling with on this. But I think this is the crux, judging by the amount of conversations I've had with so many people. as to why they're struggling, because they're looking for everything for a pointer. You know, what does the news say? What does, you know, the 5 million crypto influencers say, most of whom are being paid for their opinion, you know, by companies that ultimately it's their advantage for them to say whether the market's bullish or bearish, you know. So, you know, or, you know, are you getting your information somewhere else? Or maybe you're a little bit loose on where that's coming from. Well, one of the things you can always understand about price, is the beauty of it, is that you can see very, very clearly what's happened on a chart. And from that, we can help predict what's going to happen. For example, as we look at the rejection here, price breaks down. What does it do? Takes liquidity from below these lows, right? So anybody that was long here, for example, yeah, that made a lot of money, or maybe didn't make a lot of money, it's regardless. What happens is price comes back, triggers those stop losses, right? It then allows people to take profit on their shorts, but it also, below here is a big liquidity pool that then allows those market sell orders, allows buyers to step into the market here and take that up on the other side to bid them in, right? So we either see a relief pump here or we could see a reversal. So what do? You're like, well, it's really simple. We're now downtrending, lower lows and lower highs. Don't forget about your market structure. We can see that the bullish moves up in the market are getting violated, closed below, and continue, as we've seen through here, to keep price suppressed, meaning that price is being offered lower and buyers are happy to bid it up lower, but buyers aren't happy to bid this higher, okay? So then as we come down, we break down, we retest this, fine. So this is where we want to take some shorts. You might think, okay, but how do you get your conviction in that? Well, it's really simple, because if remember going back to our breakers, this is a bearish order block. If we close above this and retest it, yeah, it then becomes a bullish breaker, meaning that I then know that the sellers that are controlling this market are now offside, and any return to this area gives them the chance to mitigate, gives them the chance to get out of their positions and cover, and then also to join the move higher, where the buyers have now taken control of the market. Unless I get that, I don't have to worry about it. I know that the likelihood is that the pressure is still to the downside. So again, we see here, we then get this move. This is the area we're highlighting. We say to ourselves, okay, do we get the move away from this? We get that big close below, price draws back to here. We continue to sell off, right? And then we continue to sell off as we're going down, basically. You can see all the way down to the bottom of the market here. What is happening is that the white areas, the order blocks, or the areas, or the developing areas of, in this case, supply. Demand we look at from the lows, supplies we look at from the high. So this would be trending supply or order blocks continue to keep the market suppressed lower. All right. So as we look at that, where are we today? Well, today was a really nice, simple plan. I do like to keep things simple, which is here's the rejection. Price has broken down from here. It broke down yesterday afternoon. Remember, these are 4-hour candles. So why am I not trying to long this here? Well, because I'm looking at this and saying, well, this is where the sellers have control of the market and they've forced the market lower. So right now, what I'm asking myself is, well, are the buyers going to step in and we overcome this area? In which case, any pullbacks towards this, we can long up to this area here, which we see as our first kind of point of resistance. And then from here, if we blow through this, we can look for this to become support. And when all of this is going on, the likelihood is that the market has also regained some form of bullish market structure. So we can understand when the shift in market dynamics are happening, and then ideally try and place ourselves on the right side of that so that we can capitalize. Now, just to take a few moments, I just want to know if there's anybody that doesn't really understand that, or if there's anything that I can maybe explain a little bit clearer for you all. I will give some bullish examples as well, but I really want the concepts here to not just be about trend, to not just be about, oh, okay, yeah, fine, we're in a downtrend. Well, thanks, BC, that's great. But, you know, I could have slapped on some moving averages that would have told me that, and yada, yada. You absolutely can, right? Because you have beautiful confluence from that. Look what happens when we lose the moving averages here. And let me just double check this. These are normally 11.21. Yeah, 11.21.55. Or I'll use, you know, a 20 or a 21 with a 50 and a 100. But ultimately, this gives us a really good example here of how price is getting squashed below these moving averages. And anytime we draw back to them, we can see price getting rejected. So look, this information doesn't mean you can't overlay this with other strategies. It doesn't mean that you can't overlay this with other instruments, right? You can use this absolutely wonderfully with BPro, for example, right? Which is what I love using this with BPro as well, because if we look at this, I know I've only got the lower time frame trailer set on here, right? So with this one, I think it's probably set to my standard, high time frame, which is set to 4 hour. So it's the chart that we're on as well, funnily enough. But look, just for extra confluence here, I can just trust the trailer on BPro. I don't even have the divergences, the other million amazing settings on that, by the way. Remember, you guys will have access to that as members. But look, if we're following that situation, what are we doing here? We're below the BPro trailer, right? We can see here, look at the key, the last key kind of bearish supply that we had here is just keeping price pinned. So while we're here, we need to see this overcome to get bullish, because this would be the breaker. So once price is suppressed under here, this is noise, and we just look to short the market here. You can even wait for secondary confirmation to come in here, right, in the form of when price closes underneath here. Price closes here, draws back to this inefficiency, this gap, and allows us to get on board for the short. All right. So again, I don't want people to think, I get accused of this a lot, being, obsessed with price action, and price action tells you everything. It doesn't tell you everything, but it does tell you very accurately what has happened. And that allows us to utilize this skill to get it, to take other information that we have, be it fundamental, be it news driven, be it our own information, be it other indicators, and play this. All right. Michael, how are you doing, buddy? Good to have you here. So let's just take a look at this on a lower time frame. All right. And what I'm going to do is actually I'll unlock these, but let's get rid of these. Hopefully these concepts kind of make sense, because as we look at this here, price is clearly trending down. Yeah. We're also going to look what happens when we get into these larger kind of consolidations, because see price trending down here, price kind of coming back up, price kind of losing itself again here. Well, there's no obvious clear directional trend here, which obviously we're in at the moment, so we can see this downtrend. So as we look at this, the chances are that this is just consolidations, right? Price moving from the high to the low of the range, breaks out from the range, retests the underside. The very same range then acts as resistance here as price sells off. And there's a number of different ways you can draw those ranges. But for example, if you go to say, let's have a look here. So the daily's probably not quite high up enough, but we'll take a look at that. Yeah. That we can look at these here and kind of say to ourselves, all right, well, actually, look, the down close candles here from the high to the low, pretty much body to body on a higher time frame, giving us that range. Price low to high, high to low, breaks out from the low, retests and sells off. All right. But for now, I just want to kind of keep your attention drawn. Hey, Horace, how we doing, buddy? So as we're kind of looking at this here, we can just see price selling off, right? So while we're trending lower, we can establish that we're trending. And what I want to know when we're trending is when price revisits these areas that I expect sellers to be in control of or buyers to be in control of. What it allows me to do is it allows me to remove the anxiety of thinking, okay, well, where should I start longing this, right? It doesn't mean that you can't long key lows or short key highs, but often it can be quite treacherous, right? Catching falling knives, or I don't really know what the other interpretation would be, sitting on a rocket or something, right? But either way, or maybe trying to catch a rocket out of the sky. Either way, we've just identified as we go through here the areas that we want to see. So as price draws back up into this, I'm not interested in longing this, right? I did put out the other day that I feel like I'm underexposed to risk assets. If anybody follows me on Twitter, which I do feel like I am, I feel like we're heading into a very bullish 2026, just in terms of the news catalysts and everything that's washing through. And as the government data starts to come back in, we've got a lot of factors. But anyway, that is slightly maybe a conversation for a different time. But either way, whatever my thoughts are in the market, the point I'm trying to get across here is sometimes if you remove all that noise. So, for example, I've seen this morning a little bit on Twitter. I don't really go on there a lot. People starting to kick up. Oh, this is it. The bottom's in. We've got this positive news. This is going to lead to this. Blah, 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 blah. That's fine. Have those concepts, have those theories, but overlay them with some technicals, yeah? Don't just start longing here for no reason, because it's not, especially when you could just wait for something like this, for example. And then on a lower time frame, you can build yourself into an intraday position that you can then look to pyramid into a swing. You can start to add to that as you start moving higher if you do. Or if not, you make a little bit of money here, or you lose a little bit of money here as it all starts to go down. All right. So Okay, so open longs again after me. Okay, well, let's talk about that in a minute as well, Michael. See kind of what I'd love to know what the principle of that is, what the kind of areas that you're looking to take. Again, this isn't to be critical, it's just to kind of understand it and see if there's any way that we can maybe help with that. So I'm now going to move to a 15-minute chart, right? And ultimately, what price has done is we're seeing the consolidations, we're seeing these drops, consolidations retested, further drops, consolidations retested, further drops, consolidations made, drop, drop, consolidation, drop, consolidation, drop. All right. So as we're looking at this in here, we're then going to find a little bit more detail and we want to get a little bit more granular. Okay. So again, as price comes in, yeah, and price drives up into these areas, can we find patterns, or can we even overlay the same principles? So let's just use the same principles using our breakers and our order blocks again, right? Price draws up into this key area of resistance here. So we don't need to reinvent the wheel here. What is price doing? It's consolidated, it's broken to the upside. Lots of people will just try and long this without any kind of principal understanding of what the area is that they're longing into. What we know straight away by looking at the 15-minute chart is if we want to short this area here, yeah, which we do because of the data on the 4 hours telling us. Remember, we wouldn't want to long this unless we close above here on the 4 hour, and then the retests here would be the place that we would then look to take a 15-minute long setup. All right, just for example. What I'm looking for here is getting extra confluence here. But if you were looking to just trade this as a 15-minute entry, then you could trade obviously what you can see here on the charts. Excuse me. What I know is that I've got perfectly good liquidity forming up below here in the shape of these equal lows even, which makes it an even higher probability liquidity target. And also, as we look here again, you can kind of see this rough consolidation in here, meaning that if this is a deviation, price steps back into that, and then we flush out the other side, the likelihood's pretty high that this thing's going to continue further. But even without that context, we've already know now that we're driving into a consolidation. Why is that important? Because this is where the sellers took control of the market, right? Again, look at the lower time frame. Price consolidation breaks down. Just that, buying, trying to come back up, tries everything to get in here. These large moves up here are just inducing buyers into the market. Ultimately, they then get taken out. This area, the battle was won by the sellers. If the sellers are still in control of this area when price revisits it, we expect some of those remaining orders to be filled and for those sellers to protect that position. If they're not able to do that, or the aggression from the buyers is too strong, we overtake these passive sellers and the sellers trying to defend this area, and then price will seek value higher up. Same principle here. We get this consolidation here. If price hadn't continued to sell off, we would need to see, or I would need to see, sellers lose this battle and move higher. All right. So all of a sudden, doesn't mean you get trades every day, yeah, but it does mean that if you understand the markets and you can spot these consolidations, that when price moves away from these areas, sellers are in control. How do we know that? Because the market broke down lower. Okay, fine. So when we get back to this area here, lots of people will be saying like, oh, we've broken kind of microstructure to the upside. This could be a good place to long. Problem is not considering the fact of who won this battle within the consolidation. All right. Now, if we're looking to play ranging environments, we're just looking to play larger consolidations, right? So, for example, you can see price kind of breaking down into here. This is pretty messy. You can't really see the trend. And I'm not talking about just that. If we now focus on the 15-minute, yeah, price is trending lower, but we can see what happens. Price sets a low after a drop. Price sets a high, all right? Now, whether you're using, basic standards here and you're saying to yourself, all right, well, let's even just say, okay, well, if that's the low that was set, this was the high that was set here. What's happening? Price comes down, low to high. We re-engage this low, we step back in, we retest it, price moves higher. So we naturally target this via, for range trading principles, a midline, right? Which I've just obviously put in very roughly here, but we can see what happens. Long position here, hold the mid, first profit taken at the mid, secure the stops, target the highs. The price breaks back down to the lows, yeah? Then we look for price to step back into the range and long it. If we get the failure, you look for the retest and you look to short the range. Either way, your ability to be able to spot whether price is in a clear trend or whether it's consolidating, it gets a lot harder as you get down onto the lower time frames, right? So being able to utilize the higher time frames like we have to identify these areas, yeah. And often, like with this one where it's a larger consolidation, let's not forget that this here was the original, yeah. That was the up close candle that price broke below. Price then revisited this. Then price closed below this here. Let me just remove this for a second. Right, and we can see very clearly here this whole consolidation, the argument, if you like, or the value, the balance that's trying to be created here. Price deviates, steps back in, then that second close outside tells you that the strength here, from the buyers just wasn't enough to overwhelm the sellers, and price continues lower. So let's just take a very quick look. Actually, put those back on there. Let's take a very quick look at today's action, right? Because this is the area that we're drawing up into. So all of a sudden, we've come through the London session here, right? Again, in the London session, we can see we get that beautiful breaker candle here, the up close. Price takes out liquidity here. We get that expansion higher. Unfortunately, we don't get a retest of this area for the buyers to kind of step back in. Price runs really high. But now as we're looking at this, we can use that and we can look at it. And if we throw a larger box across this even and say, well, really, even if you were to just draw it by eye, this would be the consolidation in here. This is the breakdown, the retest, price sells off. So now we're at this key point of rejection here. So for me, I'm looking at this and saying, okay, well, we're up in an area here, right? And even if we get rid of our hand-drawn box and we keep our accuracy and focus on what we drew on the main chart, just again, for anybody, we're just looking at this, I take it from the low of the body to the high of the wick. Yeah, you can take it from the wick to the wick if you want. What I would say is just make sure you're testing and you're practicing these, okay? Then on the 15-minute, I'm saying, okay, well, if I just now apply the same principles, right? So I need to see price engaging with this area. I want to know what's controlling price. Ultimately, it's this consolidation. I want to see price carve through this like it's not even there, yeah? And then I want to see it drive back into this and give us some of our bullish setups here, which I can trade from here to here. Or I want to see price drive up into this, lose the level that should be supporting it. And again, if we draw this across, this is just a consolidation. The retest here, we can then trade it back down, to here, which in my opinion is the real kind of origin of the move that we're looking for. So then on a lower time frame chart, we can enter our position here. We know where we're wrong above the range, yeah, or above wherever the high is set. And then we can trade that down into the lows. We can then hold some of that position here, because then if we then do the same here and we lose this consolidation, then we can again look for price to continue itself lower. So immediately you can remove a lot of these anxieties in the market just by having this very kind of simple understanding. And I think people get very carried away with market structure, which is important, but market structure can be a little bit subjective. Yeah, some people will allow for different highs. People take fractal highs. What kind of, interspacing you're using on that? Are you using multiple confirmation highs to confirm a swing high? Are you somebody like me that uses just a single print, meaning that a swing high or low for me is just a high is a high that's flanked by two lower highs? Yeah, that's what takes a high, and a low is a central low that's flanked by two higher lows. Yeah, so you get that kind of triangle pattern between the two. So other people might see that differently, and therefore when you kind of get into these environments here, I mean, what are you doing here? You're kind of, you're kind of trending to the upside here. Market structures just turn bullish, but then you kind of lose it here as it starts to set lower lows and lower highs. Tries to reclaim it here, lower lows and lower highs again, then sets bullish here. By the time you take a long position here, price has then moved against you and moved lower, versus having the understanding of a higher time frame that just gives us that conviction with our trades. So let's just look at a bullish example here, right, before we move on. And the other thing I would say is, again, going back to the whole squishing our chart up situation as we looked at here, yeah, we got the power of hindsight here, but no, I wouldn't say that many places within this, as we look, yeah, if you were moving this onto the 4 hour, very simply, you would use the same thing. If you're looking for bullish expansions now, as we are, we're looking for the black candles to support them on the way up. So let's hide this for a moment and say, okay, well, how could you trade this? Well, really simple. If we're now using the opposite, meaning that we now want to target the black candles being closed above, where to get our long trades from, well, let's look at where that's happened. So here, the retest here gave you this beautiful long. Okay, no problem. Well, what are we looking at down here then as price starts to move away? Remember, for your breakers, you're looking for these consolidations to be closed below, retested, and then give us the opportunities to the lows. And as price comes in here, price does close below, but look what happens. As it retests, it completely blows that out of the water. And then we set the bullish breaker here, meaning that this here is the opportunity to then go long, right? As we look within here, again, we identify where the candle is, yeah? So again, because we're looking for the support of these candles, the bearish candles here, yeah, price moves higher, retests it, and moves up. Great. So what does that mean? Well, this is the down close candle. Price moves higher. We then close below this, and look how price then wicks into this and keeps driving it lower. Ultimately, we're then delivering bearishly, so we're then looking for the up close or the bullish candles here. Yeah, low of the body, price closes down, retests of this to be sold off. Only when we see that dynamic shift do we then move the other way. All right, so let me just get rid of that. Let's move back just over here quickly. Just so you guys can see some examples of some bullish trends as well. Okay, so as we move into here, hopefully you guys can see this now. Price here is trending down. Yeah, so we're setting the bearish order blocks. Price moves back towards this area, sells off. Then we kind of move down and we set this one here. Same principles. Price moves away, closes below. We actually get a perfect retest of this one before it sells off. So then because we're delivering lower prices, that's the nature of it. We look at this and say, okay, no problem. But then something happens here, right? Whereby the up close candles here, when this closes below, this is the bearish order block. Price closes above this here, making this the breaker. This is what we look at for the reversals, the areas where the sellers were in control, where they've now relinquished control, buyers have taken over. And in doing so, yeah, we also see that we've set this bullish order block here. So now we're just looking for the down close candles, yeah, to support price higher. So we see this consolidation here, price moves up. This all gets a little bit grindy. We kind of move up, we come back down. We don't lose this area. If we did, guess what? We violate this and underside retest. We can then start trading the others the other way. Even if you get to here, for example, and you're like, oh, okay, actually, price moving up. We don't care about these because we've not had any momentum. There's no key sweep. There's no momentum below the breakers. Here there is, right? We see this quite clearly. The price moves up and takes this high. So now all of a sudden we're looking for the down close candles that led to this move higher, which as price closed above it here was looking to be the bullish order block. Price closes below it here, close below the body, remember, close below, retest, that now becomes our breaker, and we get the short trade, and we know where to target because we've got this untested demand here. Yeah, so we target that, secure our risk, and then what happens? Okay, well, price then does what? Reclaims this area, doesn't it, here? Look how pivotal this area is where sellers then took control of the buyers. Price flushed out, induced a lot of late longs. We understood to target the area of demand that was down here. Price then carves through this area, all right, setting on its way up multiple bullish order blocks. So we understand within these areas, right, or areas of demand supply, however you kind of conceptualize them, that these are then really, really key areas to hold. So when you're then expanding like this, you're just applying the same principles, right? Expansion, small consolidation, that's where we would look to take the trades from. Small consolidation here, price moves higher. Lo and behold, if we look at this area here on the way down, the bullish order block that's here. Why is this important? Because this is the order block. This is the area of demand that led to this big move higher. So if you're struggling with that as well, I would recommend people focus heavily on the consolidations that lead to these larger moves. Yeah, this is quite a violent move to the downside. This was a very violent recovery, happened very quickly, that V-shaped recovery. So we look at this area as being quite pivotal, and as long as it continues to hold, we can look for more upside. Yeah. Same with any kind of area that's led to a large move. Even if you go back as far as this, right, and we highlight this aggressive move to the low, well, okay, what were we looking to happen here? We were looking for this, right? And we overlay that with the breaker as well. If we draw that across, look how key this area was, right? Price sold off aggressively here. We don't quite get the perfect retest, but price draws very, very close to it. It offers a rejection here, a further rejection here, but look how the moves away are getting lesser and less. Then look at the aggressive move higher here above it as price draws back down towards it, and then we step in to our buyer program, right? Price then looking to deliver higher prices and participants being happy to pay higher prices as well. So having that understanding, Are we consolidating? Are we expanding, right? If we're within a consolidation, however you spot that consolidation, we then look for that expansion. So for example, if we're kind of looking at these areas here, and you can move through your time cycles, I know people will have different ones they like to use. If I'm using like if I'm using a 4 hour, then I like to move to a 15-minute, right? But for this one, for example, if we're looking at this on a higher time frame and we're saying, okay, what does it look like on the daily? Well, again, you can kind of see these areas here. This is your obvious expansion. Price, you can see, then starts to just calm down and chill out here. Even if we take all of these off the board and do it manually, we'll do it manually anyway, but do it manually again, right? Then what are we looking at? Same principles. Here's the breaker. This is the point at which we see the reversal. Until we see this, till we see where the sellers are in control, out of control, and we start to then also equally set bullish areas of demand. And these areas of demand or supply are of higher value, right, when they're at the origin of moves. Yeah, so you can see them at those things. So they've taken liquidity and then the market reverses. Why is that true? Well, if I look here at what's still controlling this area, in my opinion anyway, we can see this was the up move and the breaker before that move down. But if I look before, we're just being capped by this move higher as well, right? So having the understanding of that and saying like, okay, well, fair enough. If that's the up move, price sold off, retested it, sold off, retested it, sold off, retested it, sold off. Just look at how important these things still are in the future, these kind of areas when you do get them out and price does establish itself. So all we're doing through here, we're using the daily now, right, just to show you that obviously these concepts, we can move these across, because then as price closes out from here, what do we have? Well, there's the bullish demand. Yeah. So now we're starting to trend and we can see the demand starting to build again. You know, we're not closing below these areas. Buyers are in control of these areas. We create another level here that we move up from, right? And yes, price can then move a little bit choppy. And this is what I wanted to discuss, is as price moves up into these areas, look, clean expansion, short consolidation, large expansion, short consolidation, large expansion. Then price comes back down, retest this. Then we lose this area here, which then becomes the breaker. But we're back within this consolidation within here. Now, the issue that we have here is even by the time we get this information here, we can see that we've set a higher, we've come back down within the range. We're testing these lows, price is moving higher. All right, we're now rejecting at these highs. Look how different this patch is here. Right. Versus these previous ones. Yeah, and I'm just going to get rid of this order block here just so we can see it a bit clearer, right? So again, remember, short consolidation, large expansion. Consolidation, retest this area, larger, slightly longer consolidation. But again, we see that pop, we see the aggression move high. What we don't do is come back to retest this area again. Then as we move up into this area, this is the first time we see the expansion away, the retest, price moves higher. But now we're starting to see weakness because price is once again testing into this area. We start to lose this area, but we fail to show conviction because as we drop below the breaker, we retest into it, but then we just close straight above it. Now we can see here that we're starting to form a range, yeah? And one of the cleanest ways sometimes to do a range is to get to the top of the expansion and then take it across on the volume profile. This is the fixed range volume profile, which actually we don't have the volume information on here, which you can use. Okay, so that's the fixed range volume profile. We don't have the data on this particular ticker. But if not, you're just looking for the high, price to move back to the low, low to the high. Even if you're looking at that at this late stage, you're saying, okay, well, this is the extreme of the range from one side to the other. Yeah, then you're just playing this as a range, right? So once you've got this information here, you might say, okay, well, price engaged here and here. So actually what I want to do, and never be afraid to adjust a range, just make sure that it's really getting the best fit. So for me, I really like this here because I can see that now we have these key touch points. I know if price has a large move above this, retest and moves higher, or the same from the bottom, I have a much higher likelihood of being able to trade this and trade the expansion. But until then, I'm trading the range higher because this is the first place, remember, we would have been able to take this with conviction because we've seen 1, 2, 3 touch points now. Yeah. So formation, First point, second point. Now, obviously, this was slightly higher then until we got new information, but just make sure that your ranges are as accurate as you can make them. We then have a fourth touch point, so we looked along this unless we broke out, retested it, and moved lower. Now, as we move higher up, breakout, right? Now, it doesn't mean that this is going to definitely hold, but the principle is very, very simple. We are now taking out the extremes of this. We've had a move away, and now what we're doing is we've gone from, violating bearish order blocks and bullish order blocks and breakers to having a clean breakout. And then as we look back, we can see here's the breaker, this white candle here. What do we want to see? Breaker closed above, retested perfectly, price moves up. Then what do we get? We then get the sections of bullish demand or order blocks being created here. And then they basically get supported all the way up. And what we see from here is that price breaks out. The other great thing about understanding consolidations, right, is that we're not going to see it here because we don't have the data. But if you had data looking back, then there are also areas that you can target. All right, because often when price does break out or breaks down, it's targeting these other previous areas of consolidation. Horace, in there with a question. WTA, I do something similar. Awesome. But there's a thin border between a retest reclaim of the area. What's yours? 4-hour close, daily close. Because I see you point to an SFP wick outside the range area. Yeah, really good question. So the definitive rule that I go on is one of momentum, and then I need to see price draw back to a formed area of demand. Yeah. Or if price breaks out from here, I look for a retest of the range higher. Yeah, so this is on the daily. Let me just put this in here. So this is on the daily chart. And we can see here, price had this close outside previously. Yeah, so I'm going to look at this candle here. And we're also going to look at this candle here. And actually, let me do it like this, because at that point, you would have not known that was a rejection. Let's just say, for example, this range continued before, right? And we saw price close above here. This is really important because this is where the price closed above and then ultimately failed and then came back in the range, underside retest, and then sold off. We then saw a further rejection here, one here. The first thing that I'm looking for is a full-bodied candle close, yeah? So if I'm drawing my range on a daily, I need to see a daily close. That's the first thing. And I want to see momentum. I want to see a relatively big body and minimal wick. So even with this one, there's a little bit of upside wick, but there's also a little bit of downside wick. Looking back on the expansion from here, this is telling me that, okay, this is an area worth checking out. So first tick box is a daily close or the close on the time frame that you are using, all right, to draw the range. So if this was a 4-hour range, I would need a 4-hour breakout. If it was a 15-minute range, I'd need a 15-minute breakout. And that would mean a close above. That's point number one, all right? Point number two is then monitoring the secondary candle for a bullish setup. And I don't want to see price draw too deep into this area unless I was looking at it retesting an area of demand. But even then, I would probably take a secondary entry once it had closed outside. Yeah, so on the 15-minute, and I'll show you what that will kind of look like here. Well, actually, in truth, 15 on a daily, you'd probably move down to an hourly here, right? And then all I'm doing is looking to frame that. So remember, the blue arrow shows us here, right? Exactly the same principles. Here's our down close candle. We haven't taken the form of liquidity, right? Down close candle, no liquidity taken. Down close candle, no liquidity taken. Down close candle, 3 of them in a row. Yeah, liquidity taken from these lows, price closes above. So this is my entry here. All right. Now, if we look at this same principle back here, yeah, here's our go arrow. We can see immediately on our hourly confirmation, we haven't closed above this and we failed to take liquidity. Price did take liquidity here, but look at all the consecutive down close candles. This is the area I'd need to see price closing above, and we just don't get that confirmation. Had we got this move above here, retest of this, then that's where I'd look to go long. And then what I will actually do is I will then, more often than not, then finesse the entry on like a 5-minute chart. All right. So like with this one, for example, you don't obviously always get it, but just in terms of managing that selection, I would look for price to then, 5 to maybe a 3-minute chart. You can use exactly the same principles here. So again, we're now just moving down to this time frame arrow. Have we swept liquidity? Yes, we have. I'll even draw this one in. So liquidity sweep. All right, I'm then typically looking for a breaker as an entry candle, but you can still take the order block here. So we swept liquidity. Does price close above this? Yes, it does. Like I said, I would utilize a breaker here, but you can do all kinds of entries, right? Price has purged liquidity, a strong move. Ooh, above this, closing above it. Again, telling me again, what else? We also set this. So this red line for me is just something I teach people for quite a long time now, called a breaker line. It's just the top of the breaker candles, the up close before the sweep. But then we can also see here that we have these three beautiful down close candles giving us the order block. Price driving into these here. And then you can take in my entries here, and I know where I'm wrong. Yeah, because once I draw in on the retest here, I always put it a few points below the low of the order block or the breaker candle here. All right, and then ultimately it just helps me kind of try and squeeze out the biggest risk to reward that I can. Yeah, sure. So let's look. So to a definitive rule, you go on. Okay, so at what point? So yes, but what you want to do right now, in the power of hindsight, you could not know at 11, that is the range high. So do you mean on Horace, the one here, like around here, basically, that we were looking at on the daily? Because I was just giving that as an example. At this point, exactly, you'd need the 3 touch points, right? So we could, for example, obviously we didn't kind of break out of this here, so it wasn't the best example, but maybe this as a low would be a better example, right? Because this is the only point I would consider taking the breakout from the high. I was just kind of trying to give you an idea of what a failed breakout would look like. But you're absolutely right. So if we look at that and then we put that in positions of taking it on the low, first of all, I wouldn't be crazy for this one, because again, it's not a full body candle to the low. But if we do just look at that as an example and say to ourselves, all right, well, where do we get that? Let me just pop replay on here. Otherwise we're going to, we might be here for a while. Right, price driving up here. So this is my breaker candle immediately. Yeah. And we don't close below that at any point here, nor do we close below this, making it the order block. Remember what I said to you as well about price having to come back too far deeply into this. But let's say, for example, you look at this and you go, yep, no problem. Okay, well, this here is the down move before the sweep of liquidity and price closed out. So this breaker and also this order block here, this area of supply, yeah, as price closes down below this and then comes to retest this, yeah, this is now the area on the 5 minute that I would then look to short. And obviously, like anything in trading, it never works out exactly all the time. But ultimately, the reason I'm using these 3 time frames is because I want to find a setup that triggers on all 3. So as we can see here, by the time we get to this, price is now well outside of our area of execution before we get that breakdown pattern. What I would need to see in here is, you know, the opposite of what we were looking at on the longs, which is a sweep of the high, price breaking down below that, and then we could trade that lower. You know, similar to this, right? Price sweeps this higher. Here's the breaker candle, right? The last down close candle. Price breaks out. We break down with some momentum, retest this here. So I would be in here with my stops above here if I was looking to trade this lower. But at that stage, I did not have the 1 hour confirmation, because the red arrow here shows me the 1800 candle, meaning that I had to wait for that close. Full body candle, consider level loss. Awesome, mate. Yeah, I just think, look, I think people really underplay, you know, looking at momentum on candles, right? That's something else that I would say. Because, you know, when you're looking at things like wicks, one of the best things you can do to establish ranges as well is just look at the extremity of wicks. Like here, for example, even seeing those rejection wicks. The low here is even juicier, right? Because you can see, just by doing an exercise of trying to embody as many of the wicks as you can. So go up to maybe about here. So all I've done there is kind of, you know, even with just this information here, what have I got? Wicks into this area showing absorption, strong close, right? And this is what I mean by a strong close, a big bodied candle with minimal wick. Don't mind lots of downside wick, just shows me more absorption. Price then, sellers aggressively trying to take this back and they can't. So then they have to give up at some point, and the pressure relief sends price higher. We then identify the wicks to the highs here and say, okay, well, now we can look at this for price to reclaim this and move higher. All these wicks to the low continue to support price, all right? So looking at this here, what's happening, the momentum's to the downside, but the absorptions from the wicks. Price moves higher again, still holds this area. This is a beautiful candle because you just look. This candle just tells us that sellers were just aggressive here, trying to get the market to move lower. And what happened? Well, they just got absolutely obliterated below these lows. Price steps back in the range. We get that pressure relief. Price moves higher. No close above. Again, just wicks down to the bottom versus this. See this large body candle here followed by this, meaning that price then returning to this area here. This is the point at which we're looking for this to now become resistance, an area that was an absolute bastion of support. So it's, for me, not just the body on the candle, but look at the momentum. 1, 2, 3 good sized bearish candles, because my game plan here then becomes very, very simple. I've got 2 potential game plans, right? One is what played out, right? Meaning that we look for this area to be retested and we trade it lower. The other one is really simple. If this area rips through and we start to find support in this consolidation or draw back to here, then it's really simple. We're back in this range, and every time we've been back in this range before, trading those lows up to the highs is, you know, a much simpler way to kind of move this through. So to kind of conclude what we've been talking about today, that there'll be some of you that will see this and you'll find this really, really clear. There'll be others of you that will watch this and you'll just think, fuck, I can't do that, or I don't want to do that, or it doesn't even really speak to me on any kind of level, right? But what it does allow us to do is it allows us to bring some clarity to our trade plans, right? So for example, like I said to you today, price drawing back into this. Yes, we are quite low with price, right? So if we go to the daily again, looking left, the issue that I've had here is we've lost this kind of consolidation in here. Yeah, this for me, if we look at this even kind of high to low here, this was a really, really important level. We've then lost this, right? This was the consolidation. This was the down move here. Price broke above this and then price flew. So we closed below this, retested it. And you can look at my Bitcoin report. You can look at the Twitter report from yesterday. Closing below here, drawing back into this. I said, these ultimately are going to be an area to sell. So it was an area to sell yesterday. Now refining this down here to the daily, say, well, if we've got continuations, we look left. This is the consolidation, really. There's this small one here. But this thin, inefficient move here could be retraced very, very quickly. So as we look across, I'm just saying to myself today, all right, well, what marries up? If the 4 hour says this is, you know, the area of supply that I expect price to draw into and deliver lower prices, the first place I can target is the low of that. Yeah, so as we look at here, this is today's low, right? Low of day. So mark this up. And this is how we can put this into a plan and how this helps kind of remove anxiety. It helps us take higher probability setups and helps us build a structure. So as we look at this here, price is now drawn back up into this. So simple, my plan is close above this, look for this area to act as support, trade it to the next area, and allow those buyers to battle those sellers to see who comes out on top. Ultimately, we're now asking the question of whether sellers are in control of this area. So, and by the way, I would also be cautious here towards moving towards the New York opening session, as we see here, right? Look how London just kind of chopped people up a lot. We got the move to the offside right on the open here. Then price drew back up into this consolidation and then sold off. So we'd be kind of looking for something similar today, right? Ideally aligned with the New York trading session. Then quite simply looking for the breaker here. Remember, it's not a confirmed breaker unless we do close below it. But a sweep of liquidity, rejection in here, you know, ideally prints coming up into this. Additional benefits here are looking for things like CVD divergences. So for example, if we look at this high here down to this low, and then looking at the very same high here, sorry, this high to this high, what we can see here is that the cumulative volume delta, the CVD, is showing a lower high, meaning that the volume's starting to compress here. All right. So as we're looking at that, kind of saying, okay, interesting. Does this then mean that this is a false position from price action and the sellers actually don't really have the power to push price up? So again, it's something that then plays into the confluence of, if that's the sweep, we lose this area, then that can be a really good position here to start looking on the lower time frame for confirmation short setups back down into this low. All right. So just to kind of cover up, because I know these sessions, I've had some really lovely messages from most people, and a couple of people who haven't necessarily found the sessions the clearest, but have found really good value in some of them. But most people really enjoyed them. And what I tried to do, that's not to say, oh, I'm great at taking these sessions. I don't think I am particularly, actually, because I kind of talk a bit too much. My ADHD does allow me to go off on tangents. But ultimately, what I've tried to do with these sessions that I've had the pleasure of hosting is to kind of try and cross over real life examples of how I trade and how I see the markets with what I would advise everyone that's really struggling now to do. So the reason that I shared so much technical information today is because I think for a comeback plan, I think you really want a plan, right? A plan, a strategy, something for you to really kind of get your teeth into and really look at and say, okay, actually, I understand why I would be looking for short trades here versus I think probably a lot of people today will look at the government shutdown news or look at other information and be stepping onto the charts with a preconceived notion that price is going higher. Today we saw, obviously an initial pump during London. People typically want price action to do well. People want cryptocurrency to do well, right? So you can understand why that want is in the market to do it. But you just, for me, you want to back that up with your technicals as well, right? So if we kind of zoom out again, yes, we have to show a bit more patience, but I'd much rather, I'd much rather see just price close above here, look to retest these and then move higher, right? Versus here, I still feel like the market's, reaching a little bit lower. And I'm willing to be wrong on that, because if I'm wrong on that and we do get the close above, then I've got even more conviction to know we're going that way, because I'm one of the people that's obviously been trapped. Awesome. Horace kept on saying I'll join the vote. Don't have the time. Soon I'll travel then. Holiday. Nice. Awesome, man. Well, I hope you have a wonderful holiday. I am a huge fan of the Christmas period. It's one of my favorite periods in the whole wide world. Just spending some good quality time with family, eating too much food. Amazing films like Home Alone and that start to take over the TV as well. Planes, Trains and Automobiles, all the old school absolute gems. And I'd love to see what you do. Yeah, CME, Charm, BTC. Yeah, RTH. Yeah. So I trade regular trading hours, obviously, like markets and like say traditional markets, ES and NASDAQ and stuff like that. But yeah, I'd be really interested to see, mate. So I think have a fantastic closeout of your year. And just enjoy yourself, refresh yourself. Markets will still be here when you come back, when everyone else comes back as well. But do remember, everyone, while you've still got access to TBN and that, do reach out to us, ask some good questions, make sure you're making the most of all the resources. You're asking the traders that you want to learn from questions, and you're using, your allocation of courses as well, right? You've got courses on WAP and stuff. You can just rip through those, ask people questions. If you're feeling a bit lost at the moment, hopefully some of these recovery sessions have kind of helped with that a little bit. And my kind of parting bit of advice on all of this would be to just make sure that, you really understand yourself, the time frame you've got to bring to this, that you're practicing constructively. You're not just sitting there looking at charts, trying to take positions, feeling a little bit lost. You're kind of saying to yourself, okay, no, I want to understand why I want to be taking positions here, why I want to see sellers in control of this area, why would buyers be in control of this area. Then when you enter the trades, if the trades work out, great. If they don't work out, it's all part of the game, right? We all have to expect to lose, sometimes more than 50% of our trades. But ultimately, as long as we're managing the risk to reward, if you're winning 3 in every 10 trades, then, if those trades that you're winning are 3, 4 are, then you're still a profitable trader, right? So then the challenges become something slightly different. Oh, I think that's a really good question, Gibril Master. Unfortunately, it's really out of my wheelhouse. I possibly have an effect. I don't know really what their kind of holdings are. It certainly could have some kind of kind of news-driven effect. But what I would do is I would tag KZM with that one for sure, and maybe even Nest Team, but definitely KZM, because I think he will definitely have a view on that will be useful, as will Jay. So that's Trading Tank, but he won't be up for about another 3-4 hours yet, just because it's he's in Canada. All right, but nice, magnificent year. Wish you the same. Great holidays. Ho, ho, ho. Exactly. And the same to everyone as well, whether you celebrate or not. I hope you have a wonderful festive period. We will still obviously be around with you all the way up until Christmas as well. So do stay in touch. And apart from that, I look forward to seeing you all on the live show tomorrow. It is incorporated with the chart request show. So if you have anything that you would be particularly keen to get charted, come on and we'll do it together. All right. Have a fantastic day, legends. And I look forward to seeing you all tomorrow.